we spoke a few months ago at the end of 2022, right? At the end of the year, you said we're going to get a big rally. Many people thought you were wrong. You weren't wrong. Let's talk about this rally. Is it over?
I still think that the stock market has some upside to take care of before it's over. I don't necessarily think that's going to happen immediately. We're coming into the summer, which tends to be more of the sell in May and go away type of thing. But I am certainly still long stocks, as I have been all year. And I don't see anything at this point that is taking me out of that position. So I still think that there's still upside to go, and that has to be completed here.
I remember some of the criticism you got when we spoke last time. It wasn't just your market call, but I think I asked you about the economy, and back then you weren't super bearish on the economy. You had said, we're not entering a super doom and gloom scenario like some others were predicting. Have you changed your outlook on the economy since 3 months ago, 4 months ago?
I think my ability to predict the economy remains the same as it was 3 or 4 months ago, which is not particularly good. I'm not any kind of great economist or anything. I understand the basics of economics, having gone to school and paid attention to that, but my ability to predict the future of the economy is no better than, or worse, I would say, than anybody else's. My thought process at the end of the year last year was that everybody in the world was predicting recession coming. So therefore, as a contrarian, the risk-reward trade is to play for not recession. Whether there's actually recession or not is almost irrelevant to me. It's really what the market does. I saw a guy who has been bearish all year, and he's a public guy, so he talks about his stuff all the time. And the market was flying in his face and flying in his face, and he was short and short and short. And he came out and said, the truth is I've been right about everything this year except the stock market. Okay, that's wonderful. So he's been right about the economy, and he's been right about this, and he's been right about that. But who cares? You know what I mean? He's been short the stock market, and that's been going up. And that's the only thing that matters as a trader, right? I'm not trading the GDP number. I'm not trading a contract on the CPI number. I'm trading the S&P 500 or whatever, right? So that's what I need to predict. So that was the idea about the economy really at the end of last year. Was everybody was so discounting in this recession that was coming that to me it was over discounted, and the play was to play no recession. And so far that's been the case. Does that mean there's not going to be a recession? Doesn't mean there's not going to be a recession. Some of the numbers are looking pretty weak right now, although some of them are not looking weak. So I can't really tell you what the economy's, I can't tell you what anything's going to do in the future, but personally, I can't really predict whether there's going to be a recession or not. I just play the markets. I believe that until the idea of this recession is given up on, the market is going to go higher. And once they give up on this recession idea, then the market will top.
Well, they'll give up on it once it actually happens, and then it dissipates. I mean, the Federal Reserve actually just announced a week and a half ago in their meeting minutes that they think a mild recession could hit, and they think it's likely to hit by the end of the year. So even the government officials are saying that too.
When's the last time they got it right? A, and B, to me, the way I saw it and the way that I still think is that the surprise is to the upside. And if you really want to get into it, and I'm not predicting this is going to happen, I'm saying this is one possibility that people don't seem to want to believe. And this is the issue with over discounting something. We kept hearing at the end of last year from CEOs. Okay, I remember one specific CEO for one of the big casino companies was saying, his quote was like, "We are preparing for the coming recession, but we have not seen any evidence of it yet." Okay, so if everybody, and this is just one guy, but this is what a lot of people are saying, if everybody is preparing for the coming recession, what do you do if you're preparing for the coming recession? Well, you cut back on spending, right? You cut back, if you're a business person, you cut back on building inventories because you know that there's a recession coming, right? So you are preparing for it. And then what happens if it doesn't come? Well, now you have to rebuild inventories, right? Because you prepared for recession, it didn't come. Now you're underinvested, and you have to start to invest again and rebuild your inventories. So in that situation, not only don't you have recession, you end up having a boom, right? And to me, if that happens, that's when everybody will give up on this recession idea. that's when everybody will chase the stock market higher, because the earnings that they thought were going to be much weaker because of the coming recession end up not being much weaker and end up being stronger. So now they can chase the market higher, and that's when I will start to give it back to them.
Okay, but Jason, why is it that over the last 4 months, the markets have been rallying despite what you said? Everyone was bearish, super bearish, predicting a recession. I don't understand this sort of juxtaposition. You got rallying stock markets, but people thinking the economy is going to suffer. Why?
That is why, because they're all short. So the market rallies when everybody's short, right? Because they get squeezed out. It's just like the people I was talking about that are underinvested in the real economy. People are also underinvested in the stock market. I mean, go out and find me one person who is massively leveraged long the stock market here. I can't find that person. I'm sure maybe they exist somewhere, but everybody I hear on TV and all the commentators I hear, they hate it. Now, they might pick and choose, okay, you got to be in energy, you got to be in consumer staples, whatever. But people do not think that this stock market is going higher, and therefore they're just getting squeezed. It's a consistent squeeze of shorts. That's just, as a contrarian, that's how I see how the market works. The market goes up because people are short and underinvested, and the market goes down when everybody gets too long. To me, it's really, in a way, that simple. So that's why it's going up. You're saying, why is it going up despite the fact that they're all bearish? I'm saying it's going up because they are all bearish.
I know some people are probably thinking this right now as they're watching you, so I'm just going to ask it for them. How do you know, Jason, that you were right, quote unquote, right over the last 3 months and not just lucky?
I think I am lucky, okay? But I'm playing odds, you know what I mean? They don't always work. I have losing trades all the time. I trade across a lot of different markets, and I trade exactly the same way across all of them, be it stocks, be it commodities, be it currencies, be it fixed income. And sometimes right isn't necessarily, to me, the right word. Sometimes it works, sometimes it doesn't. But when it works very big. And when it doesn't, I lose very small. And that's really what trading is about for me. It's not about predicting the future, because you don't know the future. It's about playing odds. It's like if you play blackjack and you count cards, right? Okay, you know when the card count is in your favor. Doesn't mean you bet at all when it is, right? But it means you start to increase your bets. So you increase your bet, the dealer flips a 10 over and gets 23 while you're sitting on 17, and you win. Well, how did you know that he was going to flip a 10 over? You didn't know, right? You're just playing the odds because you counted the cards. So that's, to me, the answer to that. Was I right or was I lucky? I'm just playing the odds. So it's part luck, but I'm just playing the odds.
How do you know that everyone is bearish? I mean, look, the obvious answer is you go on the news and you watch channels, CNBC, maybe even my channel. I've interviewed a lot of bearish people. The sentiment on the media has been bearish. Are there technical indicators, though, that you look at that would show you that everyone's feeling a certain way?
So I use the commitment of traders data very extensively, which is data that comes out on the US futures markets and the positioning in those markets, which again doesn't always work, but does show you when people are very one-sided on a positioning basis. And we came into this year and people were very one-sided short the NASDAQ, which is why I was long the NASDAQ. And then about, 5 weeks ago or so, they had actually chased the NASDAQ and gotten out of those shorts, but now they had been shorting the Dow. So I got long the Dow. And then as of last week, they had gotten out of some of those Dow shorts and they had got super short the S&P. So now I'm long the S&P. So I look at this commitment of traders data, which shows me positioning in the futures markets across these assets. And that helps me determine whether people are super long or super short or just neutral. And on top of that, yes, that can be confirmed by what you hear on TV, what you hear in the media. I'm sure, without even having seen all of your interviews, that the vast majority of people that you have on here are bearish, okay? Because the vast majority of the people that I see on all these interviews are bearish. So why would, the subset of the people that you have on be any different? And quite frankly, it's what makes sense. You have to be bearish because of what's happening, but that doesn't mean that it's right. You know what I mean? The market climbs a wall of worry. And the reason the market climbs a wall of worry is because when everybody's worried, everybody's short. And when everybody's short, the market rallies.
I need to come back to this. I'm trying to wrap my head around your philosophy here. You just said it makes sense to be bearish, but you're doing the exact opposite. I mean,
Yes.
your results speak for itself, but I just don't understand why would you do the opposite of what makes sense?
Because the market doesn't make sense. Okay.
Okay.
It never has. It never will. And that's what being contrarian is all about. And that's why when you get back to your original question, I started doing the opposite of what I did my first 10 years. My first 10 years, I tried to do what made sense and it didn't work. Okay. So after that, I decided let's try to do what actually makes money. And what it turns out, I think what makes money is really doing the opposite of what makes sense. Because in particular, when everybody can see what makes sense, because then it's discounted in. The market is a discounting mechanism. So if everybody knows to be bearish, then they're short. And if they're all short, the market has a good possibility of going up. And certainly the upside is going to be more than the downside. There's no guarantee. The market can go down, but the upside is going to be a lot more than the downside. And that's what you want to be in. Trades that pay you more when you're right than pay you when you're wrong. My trading has less than 50% profitable trades. So the game is not getting it right. The game is having bigger payoffs when you're right than when you're wrong.
All right, so let's talk about your outlook again. So you're still in this rally. You're long. When are we topping out? Or what's the level you're looking at for a top out?
I don't really look at levels necessarily. It's not really up to me. It's up to them. When these people start getting unbearish and when they start getting bullish, that's when I think we will top out. Be that in a week, a month, or a year. I don't know. That's kind of up to them. You know, when we spoke earlier at the end of last year, the idea that everyone had that I was trying to fade was that the first half of the year was going to be bad because it was going to discount the coming recession. And then the second half of the year was going to be good because it was going to discount coming out of the recession. That was the consensus view back then. So now maybe it'll be the opposite. Maybe by the end of the first half of the year, which is only a couple months away at this point, they will have given up on that idea. And then we can get short for the second half of the year. I won't know until that time comes, but that was the idea coming into the year. So let's see if that holds out.
Do you support the idea that the markets are usually forward-looking, and so this rally is actually projecting the economy to do all right? I mean, we're not getting into the economy again. We're not talking about economics, but maybe markets are thinking that things are going to be okay.
Maybe, but then why is the bond market doing what the bond market's doing? You know what I mean? And why, with the yield curve inversion and all that, because that market is not saying that. That market is saying recession, right? So I don't necessarily think that. I think that the market is going up because people are way too short.
At what point do you think people are going to be done covering their shorts?
I think, they'll be forced to. Like trend followers are already starting to cover because they're being forced to, because they're trend followers. And if the market's going to continue to go up, they're going to be forced to cover their shorts. So that'll be the first group that will get out of shorts. And then the fundamental group will also be forced at certain points to cover shorts just because of P&L reasons. But how will they ever get long is a mystery to me here. But again, I think it's maybe if the economy doesn't go into a recession and maybe it does this thing where it actually starts to accelerate to the upside, then maybe then they can get long fundamentally. I don't know. It's a very strange time because people that are fundamentally bearish, which are pretty much every fundamental person that I know or that I listen to, how are they going to get fundamentally bullish if the market's 10% higher than here? I just don't know. I could see them getting fundamentally bullish if the market goes down and takes that last year's low or something, then maybe they can start to. But if it keeps going up, how are they going to get fundamentally bullish? I have no idea. But like you and everybody else, I am watching and listening with very much interest. We will know when they do it because suddenly everybody on your show and everybody else's show will start justifying the bullish move through fundamentals.
Do you follow the VIX at all? I mean, the VIX is still at what, like a multi-year low?
Okay, it's at a multi-year low, but I mean, I've been trading for quite a while. There was a period of time for probably 8 to 10 years where the VIX traded between 8 and 13. So the VIX is, this is this recency bias. 18 or 17, whatever the VIX is at now, compared to 25 to 30 is low. But 18 or 17 compared to 9 or 10 is not low.
But is volatility an indicator for you for how the markets are feeling going forward?
Not really.
No? Okay. People can be volatile for all sorts of reasons. All right, so you are going to come back on my show and tell us exactly when people flip-flop, and we'll get your take on when to sell. But for now, you're in this rally. How are you playing this rally then? Are you just long the overall index? Are there specific stocks or sectors that you like that you think will do
I only
better than
trade
others?
futures, so I don't do individual stocks, but I am long right now the S&P futures. So that's my play. And as far as the stock market goes, that's my play.
All right. And I know you follow currencies as well. The DXY has been weakening over the last couple of months since we spoke. Is that something that is going to continue, this weakness?
I got short the British pound yesterday, so I'm starting to think that the dollar is about to go back into rally mode. I have a gut feeling, and hopefully it's wrong, but I have a gut feeling here that I'm a little early here, and if I am, I will get stopped. But I have setups to short both the British pound and the euro. So I'm kind of waiting until they confirm that for when I should do it. Like I said, yesterday I did the pound, but I think this idea that the dollar is dead, whereas 6 months ago, the cover of The Economist or whatever was how the dollar was dominating the world. 6 months later, now that the dollar's come back down, we're getting this whole rhetoric about how the dollar's dead and China is going to take over.
Yeah, I'm hearing that every day I log in, it's de-dollarization, dollar's going to collapse, China's taking over.
Correct. So we're getting very close, in my view, as a contrarian, to being the dollar going up, right? Sometimes I'm a little early on this stuff. So like I say, maybe this pound trade's a little early. I don't know. But the de-dollarization story, I think, it's just funny because 6 months ago, they were all bullish as hell of the dollar and the dollar was taking over the world. Now, all of a sudden, all we hear is de-dollarization, right? I'm starting now, and as time goes on, will probably be more so looking to fade that de-dollarization idea, which kind of coincides with the fact that I think that gold is a short as well. So if the dollar is going to go up, good chance gold goes down. So these things are kind of lining up together, which I always like. When the different markets line up together like that, it's always a stronger signal.